This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news that global bond sell-off has eased, but the reasons for it don't seem to have changed. First up today, the IMF has lowered its global growth forecast and warned of increasing risks ahead. The growth they see is from a stronger than expected performance in the US, despite slowdowns in China and Japan. They still see 2024 expanding to 3.2% this year in spite of all the supply chain disruptions. 5 years from now, global growth should reach 3.1%, a mediocre performance compared with the pre-pandemic average. It sees zero growth in New Zealand in 2024, a 1.9% expansion in 2025, and only rising to 2.4% by 2029. Still, that would be better than they see for most advanced economies, and slightly better than Australia. The US Treasury Secretary Yellen claimed that the US rejection of Made in America isolationism has made the world a better place than if it had continued, and was the basis of the current global expansion. The decline in inflation worldwide is helping to keep growth momentum steady, with headline inflation projected to slow to 3.5% by the end of 2025, and below the average of 3.6% between 2000 and 2019. Australia is the laggard on progress on taming inflation, they observe. The new threats they see relate to the rise of trade wars. Meanwhile, the US retail pulse, as measured by the Red Book monitoring, eased slightly last week to be 4.6% higher than a year ago. This is better than inflation, but at the lower end of the gains since March. And the Richmond Fed's factory survey recorded a small improvement in October, a shift that was not expected. But it remains negative all the same. Their arguably more important services survey turned positive in October, and although also minor, it was a shift that was also better than expected. Although it's been positive since April, Canadian producer prices sank in September, resuming the trend that started in March 2023. And here is something we don't normally follow, but it helps explain why the EU manufacturing base remains in the doldrums. EU car registrations came in at just over 810,000 in September, a bounce back from August, but well below the 1.1 million June level. Since the pandemic, the average has been about 800,000 per month, but that is a long way down from the pre-pandemic average of about 1.4 million per month. It's a radical step lower. The US Treasury 10-year yield is now just on 4.20% and up 2 basis points from yesterday. And the price of gold will start today at $2,742 an ounce, up $22 from yesterday. And oil prices are up $2 at $72 a barrel in the US, while the international Brent price is now just on $76 a barrel. And the Kiwi dollar starts today at 60.4 US cents, and up a minor 10 basis points from yesterday. Against the Aussie, we're down 10 basis points at 90.5 Australian cents. Against the euro, we're back up 20 basis points at 55.9 euro cents. That all means our trade-weighted index starts today at just on 69.1 and up 10 basis points from yesterday. And the Bitcoin price starts today at $66,933 and down 0.3% from yesterday. Volatility over the past 24 hours has been modest at just under plus or minus 1%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.